The Indian economy grew at 4.4% between October and December 2022 or Q3 FY23. This is what the second advance estimates released by the Ministry of Statistics and Program Implementation on Tuesday showed. According to earlier estimates, in Q3 FY22, the economy grew at 5.4%, and in Q2 FY23, GDP growth was recorded at 6.3%. In the current financial year, India's gross domestic product is expected to grow at 7%. In the first advance estimates released in January 2, MOSPI had estimated GDP growth in FY23 at 7%, marginally higher than projections by the Reserve Bank of India and World Bank at 6.8% and 6.9%. However, the estimates for FY22 have been revised upwards to 9.1% from 8.8%. The growth in nominal GDP at the current price during FY23 is estimated at 15.9% as compared to 18.4% in FY22. In a survey based on 41 professional forecasters, the RBI earlier this month pegged the GDP growth forecast for the third quarter at 4.6% with a range of 4 to 6.9%. However, RBI had projected the real GDP growth for FY23 at 6.8% with the third quarter and fourth quarter growth at 4.4% and 4.2%. So what's behind the slowdown in the GDP growth rate in Q3?
Well, the GDP number for Q3 of FY23 did come in below our expectations. We had anticipated that there will be a sequential slowdown between Q2 and Q3 because of a base effect related to the recovery that had taken place last year. But having said that, the number is certainly lower than what we had expected. And part of it is coming on account of a consumption trend, which is certainly surprising to us. It is belying the recovery in consumption of services that we're seeing across the board. So we're surprised on that account. And also when we look at the GVA side, which is the production side, the one area that stood out coming in weaker than our expectations was public administration, defense, and other services. Given the trends that we saw in the revenue expenditure growth of Government of India and the state governments.
So actually, the Q3 GDP growth number does not come as a surprise. So we were looking at a number of around 4.6%. RBI had 4.4%. So I think we have come broadly in this particular range of 4.4 to 4.6%. The reason I say it's not really as surprising is that because it has to be looked at in the context of what is the overall GDP growth number for the entire year. So here, for this particular year, the NSO is talking of 7%. RBI had 6.8%. We at Bank of Baroda also had 6.8%. So with this number of 4.4%, we seem to be well poised to attain this number of 6.8% to 7% for the entire year. Now, why is this happening? One is, of course, there is an inherent slowdown which we are seeing, especially in the pace of consumption as well as capital formation. That is more on the demand side. And there's, of course, the statistical base effect, which is also there, where last year we saw a kind of a bump up in terms of the growth numbers, primarily on account of the negative number which we had in the previous year, that is 2021. So that is a kind of a minor correction which is taking place.
Also, will the slowdown continue in Q4 too?
So for Q4 of FY23, we are currently expecting GDP growth to be between 4.5% to 5%. So in sequential terms, that might be a slight uptick as compared to what we've seen in the previous quarter. But I want to just qualify this by saying that when we look at the YOY growths, there's a lot of base effects which are caked in. And if we actually compare Q3 of FY23 with the pre-COVID quarter, then there is an improvement in the growth as compared to the same metric for Q2. So it's a slowdown on a YOY basis, but it's actually an improvement relative to the pre-COVID quarter. And, there our view is that looking at the pre-COVID comparison may actually be more meaningful.
See, we do expect the slowdown to continue in the Q4 numbers because I think whatever pent-up demand we saw in the first 3 quarters would have been exhausted. And I say it would have been exhausted because we don't have the occasion, we don't have the festival season, something which kept it up. And second, we have had relentlessly high inflation, which has come in the way of real consumption. So I think that's something which is going to get reflected in the fourth quarter too. And we have also seen that in terms of something like investment, the states have not been playing their role. They have been very conservative in terms of their capex spending. So most of the heavy lifting has been done by the center. And that's also going to sort of limit the kind of growth which you're going to see in overall capital formation. So put consumption and capital formation both together, I think the slowdown will continue in the fourth quarter too. Yeah, for Q4, we're looking at a number closer to 4.2%. That will bring down the overall growth rate to 6.8% for the entire year.
India's economy grew at a weaker than expected rate in Q3 FY23 as manufacturing output contracted for the second consecutive quarter and consumer demand slowed. Wide revisions were also made to earlier GDP data. Meanwhile, the NSO kept the FY23 growth forecast unchanged at 7%, implicitly assuming 5.1% growth in Q4 FY23. And finally, growth relative to the pre-COVID level rose applicably to 11.6% in Q3 FY23 from 9.4% in Q2 FY23, indicating an improved, albeit stubbornly uneven, economic recovery.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.